This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on February 7th, 2014. Our time is 8:49 in the morning, Mountain. Radio show runs on your favorite radio stations. Also, the shows are archived. You can stream them online. Harold's websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Have iTunes on your portable device. Type in World Financial Report on Radio. You can find us there. Subscribe to the podcast. You will never miss a radio show. On top of it, we are portable. We go anywhere you do. As we tape today's show, jobs numbers out of Canada. We gained 29,400 jobs. Unemployment rate went to 7%. They had expected a gain of 20,000 jobs, so that's a positive. In the United States, a very poor number, 113,000 jobs. The expectation was 180,000. The unemployment rate, strangely enough, went down to 6.6%. Today, the U.S. debt ceiling expires. They're hitting the level of $17.2 trillion. That means they have to raise the debt ceiling from now until the end of the month. If not, the United States is out of money. We'll have to wait and see how that plays out in the United States with Congress. Also this week, the metals traded within a range. And very exciting news. We'll talk about it later in the show, but Harold's website, hsfineauctions.com, had the best auction it has ever had, not only with the diamonds. We had an outstanding orange diamond and pink diamonds, the coins as well. The gold and silver coins that went were just embraced by investors in a major way. It was so exciting on Wednesday, and Harold will talk about it later in the show. But another interesting week in the financial markets, and this debt ceiling thing could get quite interesting from now until the end of the month, when they finally have to really put up or shut up, because they will run out of money.
Exactly, and how frightening is that to think that this is happening all over again? You know, a country as big as the United States and powerful, that their economy is so bad at this point here that they can't even pay their debts. Now, obviously, they're not going to let them default, so something's going to have to be done. But again, you know, $17 trillion, and where are they going to pay that? The interest on that alone is so restrictive, which is another reason why they can't raise interest rates at this point. So the fact is that the United States is in big trouble. You saw it in the stock market this week and last week. The Dow has dropped over 1,000 points. It was down 350 points one day alone this week. So basically, the markets are very volatile right now. Gold is been doing actually very well this week. We're back up 720 today as we're taping the show. We're at 1266. Now, if you notice in the gold market, every time we hit 1270 and we want to get two closes above the 1270 level, the market tends to back off. So it appears that there's very heavy resistance at 1270 in gold, and there's very heavy support at 1180 in gold. So that's where the trend has been. That's where we've seen the market trading for the last long time. Now, if we get two consecutive closes above 1270, the next level for gold is 13 and a quarter, where there's resistance also, minor resistance at 1300, which is really just a psychological number. The numbers do show that 13 and a quarter is a very important number. If we were to get two consecutive closes above 1325, then the next major line of resistance is all the way up to 1600. So there's a huge gap there that gold would want to fill. But what we need to do to see that happen is two consecutive closes above 1270 and then two consecutive closes above 13 and a quarter. And believe me, that is not impossible in any way, shape, or form. Silver is similar. Silver's been trading, you know, at this point here, we're up 4 cents. We're trading at 2009. But the major resistance for silver is at 2080. And the major support is at $18. So again, we're trading within that range. We'd like to see two closes above 2080, and then the biggest number for silver is to get it back up to 28.75. We break 28.75 and we're back in the races, and we will take out that $50 level again, and we'll see gold take out 19.20. The other thing that will help gold and silver break the all-time highs that we saw back in 2011 is what's going to happen with the U.S. dollar, because the U.S. dollar has been hovering around the 78.5-cent level where there's very heavy support, and the 81-cent level where there's major resistance. So we've been trading back and forth in that range. If the U.S. dollar breaks down, which some of the sharpest minds in the world believe it has to because of all the money that's being printed, if the U.S. dollar breaks the 78.50 level, which it's done before, it would precipitate down to the 72.5-cent level. 72.5 cents we saw in 2011, and that was a result of gold hitting 1920 and silver hitting $50. So obviously there's a direct correlation between the gold market, the silver market, and the U.S. dollar. And as the U.S. dollar continues to fall, which it will, that will push gold prices and silver prices substantially higher. There's also major reports in the newsletter this week, which you got to get, which also explains the supply and demand situation in silver, how people are shaking their heads and scratching their heads, saying this is literally impossible, that the mints, the Canadian and the U.S. Mint, are printing so many silver coins that they basically have run out of silver. They've run out of silver and they're running out of gold. So how in the world can the price of gold and silver not be skyrocketing when the silver supplies and the physical supplies for gold and silver are so low? Again, people are scratching their head over that, but again, it's only a matter of time until these markets react the way that they're supposed to react. If you've bought physical gold and silver and are holding on to it, the fact is that we're not trading that market. You don't ever want to be out of this market. This market is going to run, and it's going to run at a time when it's ready to do so. The fact is that the big traders were forced out of the market in 2011 by raising the margin requirement so high that they couldn't stay in the market any longer. And the reason that they did that was because they couldn't match up the outstanding contracts of the ETFs and the futures contracts. There wasn't enough physical silver and gold to back up those. You see, every time you buy a silver futures contract, which is 5,000 ounces of silver, there's got to be 5,000 ounces of silver sitting in the warehouses in New York to back up your contract. So let's say there's 300,000 contracts of silver outstanding. You multiply that by 5,000, they've got to have that amount of silver in the warehouse in order to cover every single futures contract. And the same thing with the ETFs, the exchange-traded funds. For every ounce of silver or every ounce of gold that was bought in an ETF, there has to be the equivalent amount of physical silver sitting in the warehouse to back it up just in case somebody wants to take physical delivery. Now, 99% of the time, nobody takes delivery. But the fact is, the laws say that the physical silver and gold has got to be there. There's no way in the world that there was enough physical silver and gold sitting in the warehouse in order to back up all of these contracts, and that, in my opinion, is why they brought down the price of gold and silver and forced traders out of the market, because they didn't have enough gold and silver physically to back up the contracts. So they forced people out of the market, people sold, and then they were able to balance the books. It's a ridiculous thing. It's totally illegal, but we're talking about the government, and the government can do anything they want at this time, and they are totally desperate. So what are you supposed to do? Again, at this point here, if you look at the markets overall, they're extremely volatile. We've seen about a 1,300-point drop in the Dow, then the market comes up a bit, and then they play with the unemployment numbers and make everything seem better than it is. I'm a Canadian living in the United States, and I've been in this business 35 years, so I basically know what moves these markets, and I've made predictions my entire career as to what's going to happen in these markets, and have tremendous success over the last 35 years that I've been in business. But I've never ever seen a situation as dire as we're in right now, with so many situations that could basically destroy the marketplace. And I know the governments are doing whatever they possibly can to keep somewhat of a of a normal market condition, but the fact is that there's the Plunge Protection Team and other government agencies that are in the markets right now, watching the markets to make sure that bad things don't happen. But there are people out there that feel that the market is going to go lower. For example, the stock market is going to plummet 40%. Shouldn't they be able to play in a fair marketplace? If they're putting up their money and taking a risk and they're betting that the market's going to fall so they can profit, and then the government holds up them, it's the wrong thing to do, and it's totally illegal, and it takes all the speculation out of the market. And what makes these markets liquid are the speculators. Because in the commodities markets, for example, the commodity markets were originally designed for hedgers, farmers and producers, to be able to hedge and not take the risk of losing all their money or losing their crops in the market. And that happens because speculators come in and they pick up the contracts and they make the market more volatile. And that's what's needed in a market for a market to go higher. But that's not happening right now, because the fact is nobody has real faith in the markets at this point, because the fact is that they're not trading on their own volition. They're not trading on their own fundamentals, and that's a major problem. The other situation that we talked about last week, which is starting to get scary again, is the banking situation. We've heard situations lately that there's been hacking with Target and with other retail outlets, and the fact is that people are starting to get worried again because they can't get their money out of the bank. Well, last year when we had all that problem with Cyprus, it was a real ordeal. They closed the bank down. People lost 50% of their deposits, and basically the other 50%, they got worthless banknotes for it. But nobody made a real big deal about it. And again, that was a concern, because people should have been, screaming bloody murder at that particular point, because people stole their money. I know they would in Canada and the United States, but they didn't do it in Cyprus. Well, here's what's happening over the last couple weeks, since December. In December, J.P. Morgan Chase, the largest U.S. bank, limited customers to $100 in cash withdrawals and $300 in total purchases per day. How in the world is that possible? This was instituted in the name of fraud protection following the Target hacking incident. Of course, Chase customers were already feeling pinched by their bank. Recently, Chase had established a policy of forbidding, listen to this, its small business customers from withdrawing more than $50,000 a month and banning foreign transfers. Too often, changes to the bank policy are swept under the rug in the terms and conditions where your rights are quickly trampled on. Do the terms and conditions of your bank accounts allow the bank to refuse to give you money? What would happen if you went into your local branch, asked to withdraw $15,000? Would they give it to you? How about $10,000 or $5,000? Who knows? Maybe they would give you nothing at all. The truth is that major retail banks around the world are rapidly restricting customers' access to their own money. I know such an idea is hard to swallow, but it's true, and it's only getting worse. The banking industry is digging its talons into your money and is determined to make it as difficult as possible for you to get your money back. And if you want proof, just last week, one of Russia's top 200 banks introduced a complete ban on cash withdrawals. Or how about in England? In January, Stephen Cotton visited his local HSBC branch in Worcestershire to withdraw £7,000, $11,400 in US dollars from his instant cash account, and the bank refused to give him his money. They said, and listen to this, his explanation of what the money was for wasn't satisfactory. They wanted a letter from the person that he was going to pay it to, and that person happened to be his aged mother's. So basically, other customers have attempted to withdraw money from their HSBC accounts, were refused by bank managers, citing a new policy. When they complained about the lack of notice of this policy, they were told, as this was not a change in the terms and conditions of your bank account, and we had no need to pre-notify you. So that's what's happening in the banking system. And it's going to get worse and worse. As these banks get worse and worse and more trouble, it's going to cause us a lot of problems. Now, again, the banking system, the way I see it, is built on how much insurance we have that is backing up our bank accounts. And as long as in Canada they have $125,000 backing your bank account, and in the United States they got $250,000, just don't keep more than that in the bank. Because if that bank does go under and you have $500,000 in there, you're only getting back $125,000. All the rest of your money is going to be lost. So please be smart about this. Don't let your guard down and think that everything is okay. These banks are thieves in a lot of cases, and they're doing things that people are just absolutely appalled at. I hear it almost every day. We wire money back and forth to clients in the same situation, and sometimes we hear stories that we shake our head and say, is this possible, and how in the world can they do that? But ladies and gentlemen, it is happening. happening. We need to be so sharp now. We need to make sure that we have everything protected. And the fact is that there's a lot of risk in the markets today. You saw what they did to the gold and silver markets for their own benefits, and the fact is that that's only a short-term situation. There's no doubt in my mind that gold and silver are going to come back, and they're going to come back very, very strong. On top of that, the U.S. government is possibly going to shut down and not be able to pay their debts again. It's an unbelievable situation. And then on top of that, you got a stock market that dropped 1,000 points or 1,300 points in a week and is volatile as can be, and again is being played with. And then you got the same in the commodity markets. We need to be in the markets that are the smart markets, the conservative markets, the markets that you hold on to yourself. The more money you have in paper, the easier it's going to be for people to take it away from you. So you got to diversify and do the right thing. You know, the fact is that you never kill the messenger. All I'm telling you is what's fact and what's happening in the markets at this point, and the reason for that is Randy and I do not want to see the listeners to our radio show, our friends, our loyal listeners that have listened to us for 10, 15, 20 years now, we don't want to see you get hurt. It's all about capital preservation. It's all about keeping your money at this point here and not losing it, waking up one morning and finding out that all hell is breaking loose. So again, we got to be smart about this, because there's no way that we can depend on the governments to do the right thing, or the banks to do the right thing, or the markets to do the right thing. We've got to have a game plan and make sure that we stick to it and make sure we have safe money. That's why you need to own physical gold and silver and diamonds and things like that, things that you can put away for your own safety that are not going to be paper assets that can be taken away from you. So I got to tell you, Randy, everything that's happening, you listen to what's happening in Russia right now with the Olympics coming up, it's frightening to think that they had to spend $2.5 billion on security. The second you walk into Russia and you take your cell phone out, it's being hacked the second you open up your phone by the government, and they have to do that because of the terrorist threats that are present in these Olympics at this particular point. It's a crazy world now, Randy, and again, it's just getting worse and worse. And as listeners to our show and people that work so hard for our money, we need to make the right moves and make sure that we protect ourselves, and that's what we're here to do, to help you with that.
Well, there's only been one company Harold has been recommending for over 10 years when it comes to your worldwide bullion needs, and that is Worldwide Precious Metals of Vancouver, leading Canadian precious metals bullion dealer, recommended by Harold for over 10 years. They're the experts to trust and work with in this very specialized market. Give them a chance to educate you as to why you should hold precious metals, gold, silver, platinum, palladium, in your portfolio today. You can start with your own precious metals investment account. All gold is either allocated, wholesale, or premium. They'll explain that to you. They're there to help you maximize profit, minimize the risk. You'll have instant liquidity in and out of the market. You can buy and sell with just a phone call, 24/7 online access. The metal can be stored on your behalf, insured to the full value of your investment. You can ask about domestic or foreign storage and premium storage in specific coin and bar form. Stored metal is outside the banking system, and the metal can be delivered to your door. Worldwide has access to the physical precious metals that you want today. Stay away from paper promises, ETFs, and certificate programs. Get the real physical metal. Connect with Worldwide. They have an outstanding website, and it explains everything you need to know. Just go there, www.pmc.com, www.pmc.com. Even better, connect with them. Give them a call. Let them educate you as to why now is the time more than ever you need hard assets in your portfolio. 1-866-623-2002, 1-866-623-2002. Peter Schiff, he's a very well-known gold analyst out of the United States, and he was... this is in our newsletter, by the way. If you'd like to get our free weekly newsletter, Speak with Worldwide Precious Metals. This is a quote from our newsletter. He said, "The real momentum to a new surge in gold is going to be when the Fed comes back with another quantitative easing plan that's even bigger." Obviously, they started out at $85 billion, printing $85 billion. They've pared that now back to $65 billion a month. They did two tapers here in the last few months. A lot of people believe that Once they do that, you're going to see the economy take a major hit. As a result, they'll have to come back with more QE in a major way. He goes on to say, they can't lower rates anymore. We're heading back into recession. What is Janet Yellen going to do to try and revive the economy? There's only one thing she can do, and that's print even more money. When everyone figures it out, there's only going to be one place to hide, and that's gold. Ronald Peter Stofferle said this week, we are firmly convinced that the fundamental argument in favor of gold remains intact. There exists no backtesting for the current era of finance, meaning what's happening around the world with quantitative easing and easy money, obviously with low interest rates and the printing of money. Never before have such enormous monetary policy experiments taken place on a global basis. If there was ever a time when monetary insurance was needed, it is today. And he's talking about having hard assets, gold and silver, in your portfolio. And I could not agree more when he's talking about, really, we are in unprecedented times. There have never been any times like we're living in now, and there's been no back testing done. And now is a time for insurance in your portfolio, 5 or 10%, having hard assets, gold, silver, diamonds. John Ng, Canadian gold analyst, said this week the emerging market turmoil has accelerated and increased as tapering has come into effect. We saw Argentina devalue their peso, which automatically caused a gold rush. In fact, gold was up in Argentina 28%. Gold has soared in peso terms, and it's a reminder that all of this means the onset of even more risk. The classic shelter during this turmoil has historically always been gold. The last time we spoke, I suggested a major bottom had been made at 11,880 in gold. Gold then moved up to the resistance of 1270, and now we're just back and filling. He says, I think the next target is 1270 to 1325, and there is going to be a big gap up to 1600. So despite the pullback in gold, people need to fasten their seatbelts. And Harold, we have about a minute left in our first segment here. But I do agree with Ronald Peter Stofferle and even Peter Schiff. The U.S. economy is in serious trouble. We're seeing it with the jobs numbers. And you have people that are very, very wealthy, and then you have the rest of the country in a very tough state. And the people that are very wealthy are doing well, and they think everything is okay. But it's not okay, and the United States is in very tough straits.
You better believe it, and again, it's going to get worse and worse, Randy. So we got to buckle down and get ready for this, because 2014 could be a pretty frightening year. And again, we saw the volatility in the market this week, and again, I'm just sticking with my guns. I've been in this business 35 years, and I feel very comfortable the way we're situated right now. I know the metals have come down and have not done anything spectacular for the last couple of years, but it is building a base, and we knew we have heavy support at 1180, and I think this market could break out at any time. But again, we're not traders. We're buying and holding gold and silver and diamonds for a specific reason. They have a tremendous benefit to us as the economy continues to sink, and I just don't see any way that that's not going to happen, because the middle class is not spending, and if the middle class is not doing well, there's no chance the economy can get better. So again, it's a pretty frightening time, and we just need to remain fairly conservative.
Coming up, we're going to talk about Harold's auction, hsfineauctions.com. The World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on February the 7th, 2014. Our time is 9:14 Mountain. Radio show runs on your favorite radio stations. Also, we are archived on Harold's websites. You can stream the show at hesradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. You can subscribe to that podcast and never miss a radio show on your portable device. We go anywhere you do. There's only one company Harold recommends when it comes to investing in gold and silver, and they have spent a lot of time not only helping their clients make money in these markets, but educating them as to why they should have precious metals in their portfolio at all times. Worldwide Precious Metals of Vancouver, a leading Canadian precious metals bullion dealer. They're recommended by Harold Siegel for over 10 years. They're the experts to trust and work with in this very specialized market. A lot of people have come into the market because of the success of gold and silver, but there are really only a few people that you want to work with who really know the ins and outs of this very specialized market, and that's why Harold recommends Worldwide Precious Metals. They will tell you everything you need to know and educate you as to why you should have your own precious metals investment account. Speak with them at 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com. It's an outstanding website, and will take you through everything that you need to know. Harold's website's rarecoloreddiamonds.com. You can connect with Harold at 1-800-432-1022. His auction site is hsfineauctions.com, and on Wednesday night, Harold's site had an outstanding auction. Now, the featured diamond of the week from rarecoloreddiamonds.com, this week's diamond is a .53 carat Princess Cut Fancy Pink Argyle. The Princess Cut is absolutely beautiful. You can see it online. Go to rarecoloreddiamonds.com and click on the featured diamond of the week. You can see the video for it. You can also get our free weekly newsletter from Harold. He'll be happy to send it out to you via email free of charge every week. You can see a picture of the diamond in our newsletter. We also have two very interesting articles. Mark Mobius of Templeton loves diamonds, a must-read article. And it's interesting. He said the desire to hold and easily move wealth will increase as the world grows richer. And he says, I love diamonds. Also, Robert Janis has written an article, Are Diamonds or Gems in a Bubble? And I think you'll be very surprised at the answer. They're not, obviously, because no leverage is being used when you purchase diamonds or gems. Read that article, get the newsletter from Harold. But Harold, yes, it was an outstanding auction. hsfineauctions.com had an auction on Wednesday night. Not only did the pink and orange and all the diamonds, the yellow diamond that we had on offer, do very, very well, but the gold and silver coins were much coveted too.
You bet. It was a very successful auction. Very, very excited about it. We had 400 people on the auction site that night. The bidding on the orange diamond was ridiculous. We had 35 bids happening on the orange diamond. It's so rare. It's a combination of yellow and red. Look at the video of it. It is just the most beautiful diamond, and every single diamond sold. So we had a great auction. We sold over $420,000 worth of diamonds and gold and silver coins in 1 hour, and it was very, very exciting. The site just works so beautifully. I'm so proud of what we built here. There's not another company like this and not another site that does what this site does. So, you know, the beautiful thing is and again, it's obvious, Randy, that there's still a tremendous desire to own metals, because we started off selling our gold and silver and platinum pieces, and every one of them sold for more than what the estimates were. So it was very, very exciting. Love doing it. We are going to try to do at least one or maybe two auctions a month. It's become so popular, and we had people from China, even with the time difference. We had people from Australia, and we had people from England bidding on our diamonds. It was very, very exciting. It was truly international. And we have our new feature, which is an automated bidding system, and people that couldn't attend the auction actually use that. We had 4 automated bids when we started the auction, so it's really going tremendously well. You know, this is a brand new business, and I started it, you know, long before my clients are going to start to sell their diamonds. Very few clients are selling diamonds right now. It's one of the best investments you can make. So most of the pieces that went up on the auction were my own private collection. And where I didn't really want to sell any of these pieces, you know, the importance to me of building the auction business and gaining the credibility and the high net worth individuals worldwide that will eventually buy our client's diamond is paramount. So again, at this point here, I'm certainly willing to sacrifice to do everything I can to build up this business, and it's just great to know that it's really working out beautifully, and the site itself is such a phenomenon. So it was the most successful auction we've had. We're starting to sell much more expensive pieces. We are looking for additional coin deal so we can, continue to offer silver and gold coins on our auctions because our clients tend to love them. And again, we're coming out with beautiful lines of jewelry, especially pink jewelry, for the auctions also, which also sell tremendously well. And really, for the first time, we sold 3 diamond rings that were over a carat, one of them being a fancy vivid yellow that was not a flawless, and that still did tremendously well. It was in a beautiful diamond ring with pink argon millies all around it, and that did tremendously well. And then we sold a 106 fancy light pink diamond ring that did tremendously well. That was worth $120,000. And then we sold the last diamond because the theme of the auction was Valentine's Day. We sold a 101 heart-shaped light pink. It was basically a bubblegum pink diamond, and that sold tremendously, and that value was $110,000. So the auctions did very, very well. Everybody had a lot of fun. We had 35 bids on the orange diamond alone, which is spectacular, and an auction that normally took an hour to do took an hour and a half this time because of all the bidding. Everybody had a tremendous time. So we're going to announce soon when our next auction is, and again, if all goes well, we will be having at least 1 to 2 auctions a month, and that should be a lot of fun for our clients. They really tend to enjoy this. The diamond market is just on fire right now. People are so concerned about the banking system. The fact is that what do you do with your money anymore? Everything is so risky. Who would ever think that keeping your money in the bank is so risky? And by the way, the report that I read to you today, if you want a copy of it, just contact me and I'll send that to you. But if you're keeping too much money in the bank and interest rates are at 2%, you're not making any return because your taxes are higher than that and inflation is higher than that, so you're losing money by keeping all your money in the bank. On top of that, the banks are suspect. They could take your money. They're doing things that, are very concerning and maddening to think that they have the right to do that. And who reads the terms and conditions? Let's face it. You don't sit there and read 5 pages of terms and conditions and hire a lawyer to read it when you open up a bank account. It seems simple. You open up a bank account, you put your money in, you get a little of interest, you take your money out when you need it, and then they tell you that you can't have it or that the bank is not solvent anymore and all your money is gone. So basically, you got to look at other assets. You got to put things away that are not risky because 2% interest in the bank drives people back into the stock market, and the stock market is the riskiest place to keep your money at this time. So there's risk keeping it in the bank, there's risk keeping it in the market, and again, what do you do with your money? I would recommend diversification for sure, and being very conservative. Don't speculate right now. Keep some money in physical gold and silver. You're going to need that for sure. And diamonds are doing tremendously well. You're getting 2% on your money in the bank, but you'd make 15% a year on buying a yellow flawless diamond that never declines in price and increases by 15% a year. A diamond you could buy today for $20,000, a yellow flawless diamond over a carat, for example, in 10 years from now will be worth about $80,000. So if you took that same $20,000 and put it in the bank, you're only going to get 2% a year, which is $400. You put the $20,000 in the stock market, the chances are excellent you're going to end up losing it. So the fact is that there are other alternative investments that do extremely well during these difficult times, and diamonds just happens to be one of them. We recommend very highly the yellow flawless diamonds. They have a track record. Back in 1980, you could have bought one for $500. Today, they're $20,000, and soon they will be substantially higher than that. In fact, there's very few yellow flawless diamonds around. There's about 100 carats a year that are cut for the entire planet. And to let you know that many of ours have been sold. We sold a huge amount of our yellow flawless diamonds, and then with our fancy light yellows, which are our canaries, which I had, in fact, about 100 carats of those. I've taken those, and we're making a 100-carat flawless yellow diamond ring. It's going to a diamond necklace. It's going to be absolutely outstanding, but it's also going to take 100 carats off the market. And then we're going to make a bracelet and a ring and earrings to match, which will take almost all the diamonds off the marketplace. So I love what's happening in the yellow flawlesses, and these are the type of diamonds that do best at auction. It's when you looked at the auctions with Christie's and Sotheby's, even though there was diamonds that sold for huge numbers like the Vivid Pink that sold for $83 million and the Vivid Orange that sold for, $35 million. Those are huge diamonds that most people can't afford to buy. but it was the medium-priced diamonds, the lower-priced diamonds in the 20, 30,000 range that went up 3, 4, 500%. And we also found that on our auction. So, again, these are the type of diamonds that you really want to invest in. They never go down in value. They go up by 15% a year. And, again, we're taking a lot of these diamonds off the marketplace at this point to make jewelry with that we'll auction off, but it'll also help the prices and cause, maybe a little shortage in the marketplace. On top of that, the pink diamonds from the Argyle mine are doing phenomenal. They go up by 15 to 20% a year, except for the vivids that are going up by 40 to 50% a year because they're the highest color grade that you can get. And we all know that the mine is going to close in 6 years, maybe before that, because there's a lot of brown seeping into the mine where we used to get these beautiful, intense, and vivid pinks and purplish pinks and that type of thing. Now you're getting brownish pinks, and those are not the most beautiful diamonds in the world. And it also tells me that the mine is coming to a close probably much quicker than Argyle thinks it's going to. If you buy an Argyle pink diamond, let's say you're one of the fortunate ones to get a vivid pink. They're not cheap, that's for sure. They're over $100,000 for a quarter carat type of thing. But they're the most concentrated form of wealth in the world, and those diamonds can increase by 10 times, 1,000% return between now and the next 10 years. So if you're looking to put away money into something that is safe, something that will make you huge returns, that doesn't have the risk of the stock markets and commodity markets, yellow flawless and Argyle pink diamonds are the way to go. They're in very, very short supply, and again, supply and demand is always important in any commodity. Demand for Argyle pinks are reaching record levels, and demand, again, is outstanding, but supplies are very, very low, and that's a recipe for substantially higher prices. Again, what's happening with Argyle and these magnificent, beautiful diamonds, at the Argyle tender for 2013, they had 65 diamonds up for sale. 40% of them were I-1 clarity. That means that you could see at times the visible flaws. However, what makes the color of these diamonds so substantial and so beautiful is the flaws within the diamonds. So 40% of the Argyle tender diamonds, the best diamonds of the year, or I-1 or worse clarity, but they all sold for record prices. In fact, at our auction, 3 pink diamonds sold that were I-1 clarity, and they sold for phenomenal prices because, again, with Argyle pinks, it's all about the color, and that's what these diamonds are, magnificent, beautiful pink color that we do tremendously well with. So I'm just so excited about the diamond market at this time. Is doing tremendously well, but the future, what it's going to bring to us, is going to be riches beyond your wildest dreams. I would very strongly recommend moving some of your money around, getting out of these very risky paper assets and getting it into a diamond that, number one, is going to do tremendously well for you because these diamonds never, ever decline in value. Number two, because the shortages in the market and high demand, the prices are going up substantially. And number three, judging by our last auction, we sold 18 pieces in 1.5 hours. Nobody does that. We built H. Siegel Fine Auctions for you, our clients, our listeners, to be able to sell their diamonds down the road when the prices are right. And we're increasing our business worldwide to find wealthy investors that will buy our diamonds, and we found that. We have a lot of clients from England where their currency is worth so much more than our currency is. And, for example, one of the diamonds sold to an investor in London on Wednesday, and he saved 60% because the British pound is worth 60% more than the U.S. dollar is. So the currency markets plays a big part of it. Consequently, when I go to sell my clients' diamonds from Canada, for example, I'll sell them in England where the British pound is stronger so we can pick up a stronger currency. So, again, I'm very pleased with the fact that our auction site has done what it's done. It's a work in progress. It's always, a building business, and I pay a lot of attention and put a lot of money into it. And, again, it's the only company of its kind. We are the only dealers that can resell your diamonds for you. Other dealers say that they can, but go ahead and try to see that happen. Again, most of our clients right now are buying diamonds because of the tremendous bullish outlook for the diamond market, the fear of the banking system, and the fear of putting your money in the stock market, and it's just a safe asset that does tremendously well. We also are the largest dealer of D-flawless, perfect white diamonds. They're negative correlated to the stock market. If the stock market falls heavily, these diamonds go up the equivalent amount, and the diamonds we cut are perfect in every way. They're D color, which is the best color, flawless, which is the best clarity, and they're excellent in every category, cut, polish, and symmetry. And these diamonds represent 0.001% of the market. They're 10 times as expensive as a normal white diamond. But again, a normal white diamond is not an investment, and these diamonds are. Then we're also the largest dealer of green diamonds, and green diamonds are skyrocketing in price because there's very, very few of them. I got a call for a 3-carat green diamond this week, and again, I've got a couple clients that hold some 3-carat greens, but we have nothing in inventory. So again, this is the time to get in the diamond market, and the worse the banking system gets, the more and more important it is for you to have your money in a safe asset. That's what's happening in diamonds, Randy.
It is very exciting, and when you go to rarecoloreddiamonds.com, it's like going to a world's greatest museum of the finest diamonds you'll ever see. You can go to rarecoloreddiamonds.com and take a look around. Connect with Harold personally and privately at 1-800-432-1022. His auction site is hsfineauctions.com. And Harold was talking about the stock market in our newsletter. Get our newsletter from Harold this week. We have a chart. Doug Short saying the stock market looks 67% overvalued. And Albert Edwards of Societe Generale came out and said the markets will become locked in a Freddy Krueger-like nightmare that takes stocks down to levels not seen in a generation. Take a look at these charts and realize that there's an incredible amount of risk right now in the stock market. We also have, and another chart of the week we have, is a 1-year move of everything in the major emerging market currency market. And you can see that in emerging markets, the currencies have just absolutely plummeted, especially the Argentine peso, which has just gotten hammered. It's down roughly 40%, and it's no surprise, obviously, they did a devaluation here recently, and gold has been skyrocketing as a result. But another thing that's going to be a huge factor for gold and silver and diamonds in the years ahead is the debt that the world is holding, whether it be a sovereign debt or a personal debt of individuals. The CBO, Congressional Budget Office in the United States, interest on the debt to nearly quadruple over a decade. For the next few years, deficits are looking pretty good, but the interest owed on the country's cumulative debt is set to quadruple over the next decade. And they go on to say interest will be $233 billion this year, or 1.3% as a share of the economy. By 2024, it will reach $880 billion, or 3.3% of GDP. That means interest will account for the lion's share of the $1.1 trillion deficit projected for that year, and will come close to what will be spent on Medicare alone. Interest costs will jump for 2 reasons. The first is the improving economy, which is expected to push what have been historically low interest rates higher to more typical levels. The second reason is that the underlying debt will remain very large and continue to grow. And when you take a look at hard assets like diamonds, they hold their value. As Mark Mobius was saying, the desire to hold and easily move wealth will increase as the world grows richer. I love diamonds. And when you take into account gold and silver, you look at the massive deficits the United States are running, and obviously the amount of money it's going to take to service that debt. Harold, looking out in the years to come, this is not a short-term game. It's not going to happen tomorrow or the next year. But if you look out long-term, you need to have hard assets in your portfolio.
There's no doubt. Again, there's short-term thinking and there's long-term thinking, and we got to think long-term because, again, there's so much risk in the market and there's so many variables out there that can hurt us, and it's just one situation after another. Now it's the debt ceiling. If they don't raise the debt ceiling, the U.S. can't pay their debts, and then the whole markets are going to feel it everywhere in the world, and there's going to be, strained relationships between the U.S. and their partners that they owe money to, like China, Japan, and everybody else. So, again, money is tight right now. All the governments are tight on money, and they're printing, and it's reducing their currency, and it's only going to lead to one thing, which again is massive inflation. Over the short term, they're concerned about deflation possibly, and they're trying to fight that. So then you got the derivatives market. The derivatives market, again, if interest rates go up, are going to explode. Interest rates go up, which they have to do eventually, is going to hurt the stock market, the real estate market, the derivatives market, the bond market, and everything. So again, it's a real catch-22. I have no clue how the government's going to get out of this, but the fact is that it's not going to be easy, and your conventional investments are not going to do well in this type of atmosphere. You've got to look at alternative investments in order to be successful moving forward, and that's physical gold, physical silver, diamonds, classic cars, those type of things that you can enjoy, things you can hold on to, and things that are not paper, because paper is going to kill us.
The featured diamond of the week from rarecoloreddiamonds.com is a .53 carat princess cut fancy pink argyle. Speak with Harold about this absolutely gorgeous pink diamond. Connect with him at rarecoloreddiamonds.com or 1-800-432-1022. One of the stories, too, that caught our attention this week is there's a brand new hybrid bird flu in China that has scientists worried. A new to humans flu virus killed a 73-year-old woman in China, and the doctors are very concerned because it seems to be jumping very easily from person to person. And Harold, if you've ever seen the movie Contagion, it's a movie that will absolutely frighten you because it all started with one bird with the flu, and it spread throughout the world. And that's why we're saying have an insurance policy in your portfolio when it comes to diamonds and gold and silver. Just be prepared. You never know what can happen.
Yeah, that was scary. I read that also. The woman evidently visited a bird farm or a chicken farm, and next thing you know, she died. And then 3 other people caught it, and they said it's a strain that they've never seen before. So I did see that movie, and it's frightening how quickly this all, everybody gets contagious, and it spreads and spreads. And there's just so many things that we have to worry about at this particular point, and we can't spend our entire time worrying. We got things to do. We got to work and take care of the kids and the family and everything like that. So, again, get the newsletter this week. It's loaded with great information. We always appreciate doing the radio show. This is our over 600th show that we've done so far. So, we've never missed a show. No matter what the markets do, we are always there. We tell you good, bad, or indifferent what's happening, and we never hide like other people do. We tell you to you the way it is, so you can at least make an intelligent decision as to what you have to do moving forward.
Speak with Harold about diamonds at rarecoloreddiamonds.com to invest in gold and silver. Worldwide Precious Metals, wwpmc.com. Telephone number 1-866-623-2002. rarecoloreddiamonds.com. The telephone number 1-800-432-1022. With a couple of minutes left, a few things from our newsletter. Emerging markets are more vulnerable than ever to Fed tightening, and that's because of the quantitative easing being tapered. That's according to the Bank of International Settlements. They're very worried there could be a currency crisis, and that could happen in the emerging markets. Currency crisis with Chinese banks as well could trigger a global meltdown. A rise in foreign funding at Chinese banks poses a threat for international lenders. Also, a Harvard economist, his name is Terry Burnham, he has pulled all of his money out of the Bank of America. He is very concerned that there could be a financial meltdown in the United States, and he does not want his money in a big money center bank like the Bank of America. We touched on it earlier. The Treasury Secretary Jack Lew warns the United States could default very, very quickly if they do not raise the debt ceiling. The debt is up since U.S. President Obama has been in office by $6.66 trillion. So you're even looking as well at Obamacare pushing 2 million workers out of the labor market. It's a very chaotic time. And with Harold, with about 30 seconds left, your final thoughts.
I'm saying to be very, very cautious. Again, this could be the year that we see a lot of volatility in the markets, a lot of things happen that, we've talked about for a while. So remain conservative. Please give us a call. If you got questions on anything, if you got concerns about your financial situation, how you're hedged and everything like that, please give us a call. We'll sit down with you and talk to you on the phone and give you ideas and help you every way that we possibly can. We truly appreciate the fact that our listeners have been listening to us for all these years.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com. Speak with him personally and privately, 1-800-432-1022. The auction site is hsfineauctions.com. There's only one company Harold recommends when it comes to investing in gold and silver, Worldwide Precious Metals. www.pmc.com is their outstanding website. You can speak with them as well at 1-866-623-2002. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.